So just touching on insurances, I know a couple of people had some insurance-related questions, and I'll just cover those off for you. If you've got further questions, please ask them, but we'll probably address most of your insurance questions here. There are four major types of personal insurances, and three of them are generally available through Super. And three of them are available through Christian Super. The four types are life insurance, so that pays a lump sum on death. Total permanent disability insurance, which pays a lump sum if you become disabled. Trauma insurance, which pays a lump sum on the diagnosis of a particular illness. And the two major ones are heart attack or cancer. Trauma insurance or sometimes called critical illness insurance, is generally not available through superannuation. It's not available through Christian Super. It's generally the higher cost insurance as well, because it's a higher probability of facing a trauma than there is, for example, of death. And so therefore there's a higher premium associated with it. And then the final one is income protection insurance, or sometimes called salary continuance insurance. And this is the one that pays 75% of your salary when you're unable to work due to ill health. It's sometimes people confuse it with, if I'm just not able to work or not able to find work, it doesn't trigger then, or it doesn't pay out then. So three of those insurances are available through Christian Super. The benefit of doing it through your super fund is generally they have scale, and so they're able to get access to a larger. Through their scale, they're able to negotiate the fees and the premiums down and get a certain level of cover without having to do any underwriting or having to go through the process of underwriting or checking all your details with the insurer first. Just have a question from Eleanor. Does income protection cover if you have an accident? Does income protection cover if you have an accident recreationally, e.g. motocross? Great question there. You would need to really check your particular policy. If it's through Christian Super, then it's a quick email through to them to just verify that, or to check whether you are covered for that. But often when you're involved with activities that are the adrenaline type sports, or like skydiving or hang gliding or motor sports, they often have exclusions on them, particularly when they're within your super fund. If you want to focus on insurance cover that is that takes into account or covers you in those higher risk activities, then you generally have to do it outside of the superannuation environment. So why hold insurance through super? Well, one is, as I mentioned earlier, that there's the cash flow, so you're not paying the premiums out of your everyday cash flow. The other one is that there's the scale that we talked about earlier, and the other one is tax. So with life and TBD insurance, they're generally not tax deductible if you hold them out of super. Whereas if you've got them in super, if you hold them within super, and there's a tax rate of 15%, then you're effectively getting a tax deduction on those premiums of 15% by the fact that you're paying them through your super that you wouldn't otherwise get. However, if you hold income protection insurance outside of super, that is tax deductible. So the full premiums are generally tax deductible. So you might get a 15% tax deduction if you hold income protection insurance within super, but outside of super, you get the full tax deduction. So it actually reduces your taxable income. So if you're on a 30% tax bracket earning between $37,000 and $80,000, then you're saving 30% of the premiums through the tax deduction. As I mentioned earlier, Christian Super and most super funds only pay out the income protection for 2 years. One thing you can do if you wanted to be insured to the maximum level is that you can have your Christian Super insurance policy covering you for 2 years, and then you can have one outside of superannuation covering you from 2 years to 65 or 60, however long you want to do it. But like with all insurances, it really gets down to you could be insured to the max and you would pay significant premiums for those, or you can have no insurance at all. And it's a matter of working out where, I guess, on that line of continuum you are comfortable with and how much you're prepared to pay to get the level of cover that you're after. Within super, there's generally an indemnity value rather than an agreed value. If you think of this in terms of a car, in terms of car insurance, you can either agree that with the insurer that your car's going to be worth $20,000, or you just accept their valuation at the time that you have the accident. And similar with your income protection insurance, you can agree with it's basically an indemnity value, or whatever the insurer sees your salary at, or assesses your salary at for the past period, or but outside of super, you can generally get an agreed value of income protection. The other thing is with superannuation payments. Insurance payments. So, say for example, you've died and your superannuation will make a payment to you. What happens is that the payment is made into your superannuation fund, and then from your super fund, it then gets distributed to you, to your beneficiaries. Now, if those beneficiaries are non-financial dependents, say for example you've only got adult child, and in the couple you both died simultaneously, then your superannuation benefits are going to go to a financial non-dependent, and you could be taxed at reasonably high tax rates of possibly 31.5%. I think that's usually 16.5%. So, but it's between those two figures is what you could be taxed. So if your insurance payouts within super are going to are designed to go to financial non-dependents, then you need to factor in that tax as well. And then the other scenario to consider about insurances within super is that there can be different definitions with the policy and within super. So your policy might pay your total and permanent disability cover into your super, but your super fund might not satisfy the superannuation rules to get it paid out to you. So there's some complexities there as well. But generally, your super fund is a good way to get a cost-effective, good level of cover, at least for a starting point. I'll just try and... So Roger's just saying, I have life insurance with AMP and pay monthly premiums. Can I arrange payments to that company out of my Christian super funds? Yes, I now understand the question. No, you can't. No, you've either got to have it inside or outside. One thing, though, you can potentially do with your fund with AMP, though, is that generally those types of companies allow you to have that policy held within super. So all it is you're paying the premiums into your super fund, say for example, your insurance premium with AMP is $1,000. Then you pay that $1,000 in as a super contribution, and then you're able to effectively get the tax benefits of it as well. So that's probably the better way of going around it, or going about it. So that's insurance, is one of the benefits of super.